Well, good afternoon, everyone, and welcome. Welcome to our webinar, Automating Cash Flow. It's an exciting webinar today because we have a high number of attendees. So we certainly know that this is a topic of interest for a lot of our clients, and we're very happy that we're able to present this session for you this afternoon. So just before we get started, there's just a couple of items I wanted to reference for you. Firstly, we are going to be able to answer some questions for you. So we're going to go through the presentation today, and Philip will actually take us through the session with the content. But at the end of the session, we will allow some time to actually answer your questions. Now, the way you can do that is on the right-hand side of your GoToWebinar panel, there is a questions tab. If you just type your questions into that tab, we'll allow some time at the end of the session to get to those questions. Should we not be able to answer them all, we'll come back to you individually with the responses. And the second item, just wanted to make sure you're aware, is we will be recording the session for you today. That'll allow you to either re-watch the session or forward it to anyone else in your organisation if you'd like to pass that on. So I have Philip here with me today who will actually be taking us through the presentation. Philip's been working in this space for a number of years and has a lot of experience, even particularly in helping organisations with the cash flow modelling. Now, Philip, I know you're on the line. We can still see the first slide. Can you take us through to the next slide, please, Philip? Thanks, Phil. So just to confirm, you can ask those questions. We will record the session, and as part of the follow-up, we'll actually send you a thank you for attending and a link to that recorded session that you can see on the YouTube channel. So without further ado, I'm going to hand over to Philip. As I mentioned, we will come back at the end of the session and answer your questions right at the end. So thanks, Philip.
Okay, thank you. Hello, guys. Let me just quickly start the webinar by going through the three main topics I'm looking at. I'm trying to break it into three areas. Start by very quickly talking about some of the common pitfalls around developing cash flow forecasts. Then I'll have a look at our automated solution using board planning software. And then as an add-on, demonstrate how you can tweak the drivers, create multiple scenarios, and get some more added value out of using an automated cash flow solution that you probably can't achieve with, say, using Microsoft Excel. Just start by anecdote. My interest in cash flows is because in a previous life I was a finance manager of a marketing company. We were almost cash flow negative in that we would get new business, we would get the bills in from the creditors, and we'd probably have to pay the bills before we got the cash in from our clients. So the managing director would burst into my office every so often and say, "We've just won a new client, it's worth $1 million a month." After I'd finished congratulating them, I'd be on the phone to the bank manager saying, "We need a larger cash overdraft," because I knew being slightly cash flow negative, big clients means we'd go into greater debt. And the next question, of course, the bank manager would say is, "How much money do you need?" Which would send me scurrying off to look at various spreadsheets. And I, at that point, wished I had a better solution. Now I have a better solution. Okay, so what are the problems with cash flow forecasting? And let me define this by saying the type of statutory cash flow statement is quite achievable and should be achievable in most of your reporting softwares. I'm really talking about a cash flow forecast, looking at where we're going to be in the coming year. Now, most of these, from our experience, seem to be done in Excel. And there's a couple of problems with that. All the associated problems with relying on Excel for a key part of your business. They're often very complex cash flow models, hence the use of Excel. We see that they're almost entirely dependent on one person, usually within finance, who knows how this model works. everything has to be funneled through them, and often it's one answer. You can ask one question, they go away and they'll give you one answer. It doesn't evaluate multiple questions or multiple scenarios very well. The third thing we've noticed is that there is no one-size-fits-all solution. Going to market to offer a solution that's a template doesn't seem to work particularly well. Each client has unique areas that they need greater or lesser emphasis in when it comes to cash flow. Okay, so let's have a look at what we've developed. This is using Board's planning software. Although it's still planning, it's not perhaps what a lot of our existing clients are currently using Board for. We're hoping that they will start to use this in this area. We've got a simplified cash flow model. We've got a reasonable amount of complexity, but maybe there's a few things that you'd say are missing out of this. We'll come and address that towards the end. But we work as a wheel. We'll work our way around the wheel into each area and end up with our reports. The first thing I'd say is that at a base level, you have to be able to look at your chart of accounts and divide them up in several different ways. So I've got all my accounts running down here for income and expenses. Now, I've analysed them into reporting lines for my P&L, but I've also categorised them into cash flow lines. Some are non-cash, for instance, depreciation, and others are a particular cash flow line. And I can easily maintain that here by saying, the salary expense goes to whichever wage expenses and so on. So it's certainly this model that we're showing you is entirely maintainable from the front end. And that's the aim of what we're doing. Okay, let me go back to the start screen. Okay, so let's work our way around the wheel and show you how we put a cash flow together. We start by getting in some opening P&L numbers. Now, we can get them in from, say, your last budget or a mix of budget or actuals, whatever you want. So we can start by saying, all right, let's do this for year 16-17. We can do multiple years if you can work that far ahead, but let's just look at 1 year. It will go off now and pull from our budget and put it into a cash flow P&L statement for us. We can change this if we needed to, but let's assume that this is working for us. The thing I'd point out is that from the business's perspective, we're making a consistent and fairly reliable profit every month here, 1.2 million over the course of our year in our example company. So from management's perspective, they're probably not worried about cash flow at this point. Okay, so let's start with the first area, capital expenditure. What type of CapEx are we looking at to do? Very simple. This could be part of your budgeting solution, or you could pull it out and put it specifically into your cash flow to allow you to change it. I've entered some values in. We calculate depreciation, which will come down here based on the useful life, and that will update my cash flow to impact on bank and the bank account and so on. And if we come back now to our home, that you'll see that our home screen, you'll see that there's now a tick against that. We can, moving further along, we can have a look at debtors. And again, we're pulling the debtors from our forecast, from our sales. We've made some assumptions here saying that our debtors are fairly lousy. We're getting 20%, and then it takes us basically 120 days to clear all of our debtors. But we can do the same thing and calculate the debtors, which will give us an aging that will feed into the cash flow. We have the same principles for creditors. I've expanded this a little bit because we've seen from our experience that our clients have actually drilled into, say, the creditors and said, okay, well, we've got different types. We've got, stock build, we've got replacement cost of sales, we've got, non-operating, so the general expenses, and then we've got a CapEx. And we can make assumptions around when we're paying our creditors according to each group. Again, We can calculate these and get an end result down the bottom. We also have the ability to be able to say, what's our opening balances, and are we doing any stock build over the course of the year as well, which you can see are the lines that are highlighted in yellow. So if I come back here, we're working our way through. We've got the ability to look at company tax, and I've made the assumption here that we're paying our company tax on a quarterly basis, but that could be 6 monthly or monthly or whatever you want, and it could be in arrears or so on. I've just made a simple assumption here. We've also got another assumption around what the company tax rates are, because who knows what they're going to be in coming years. Again, we have the same process here where we're calculating the tax, then that updates the cash flow. So you can see the profits are coming through here. We're calculating the tax on that and working out them on a quarterly basis. We can also look at updating interest. So we have a bit of money in the bank. So if we have money in the bank, that'll update interest. And we can also look at doing adjustments, which would allow us to do manual entries to the cash flow on the grounds that for some reason or other that you might want to change the end results. Now, what we can do is, if we're happy with all of our assumptions here, you could just simply create the opening expenses and then do all of these at once. With a product like Board, we can string a whole series of actions underneath a button, and that button here is the cash flow process. So if I go through this, this is essentially doing each of these steps automatically for me: creditors, ticking as we go, company tax, interest, any adjustments, and then telling me it's done the entire process. We need to do this in steps, because obviously if you were to adjust capital expenditure, that might adjust your bank, but also perhaps adjust your creditors and so on. So there's not to mention things like tax, which are then affected on these things, or interest, which then needs to look at the P&L and so on. So we need to do them in sequence. But having done that sequence, we can then go and have a look at what my reports are. And we can see that it's not particularly good, because we're starting off with a cash balance, but due to our poor collection of our debts, it's going south fairly quickly. And that's despite the fact that we've got a reasonable amount of profit. So this is where we can start to look at alternate ways of doing this. We can save that as a scenario, and then we can come back to it and start to look at other alternatives. We've got the ability to chart this to see where things are coming from, and then we've also got the ability to be able to say, okay, let's save that as a worst case scenario. And that's a simple procedure there that goes off and basically takes a snapshot of that cash flow. But we can come back here and say, okay, that's not good enough. We need to be able to do something better, and I think maybe the debtors are it. So if we said, okay, let's get more serious about our debtors, and we're going to say we're going to be able to collect all of our cash receipts in 60 days. I can come back into my model here and run my entire process again. Now, the good thing with this is that any of these drivers, debtors, creditors, we can alter the interest, capital expenditure, and make any adjustments and so on. And we can quickly recalculate the entire model. And then all of a sudden, hey, look at the difference. We've got a healthy cash at end balance for every single month. We're not going into the red at all. So we might come through here and say, all right, I'm going to say that is my best case scenario. And I'll save that off. Okay, what I can do now is start to also look at doing some comparisons between scenarios. So what I can do is I can say, maybe my best and worst case. All right, so obviously, worst case scenario, we're losing money every month. Best case scenario, we've got quite healthy balances. We can start to make some realistic changes now. Get rid of a couple of these screens. Okay, we're never going to get all of our creditors in paying in 60 days. Reality is maybe we'll go through and say, well, say 60% will pay, and maybe the 20% at the end of the month. We can come through to our capital expenditure and go, okay, we're going to have to postpone that $114,000, and we're going to put it into December instead. Having done all that, we can say, all right, that's a more realistic model, paying in 90 days. We're pushing back some of the capital expenditure. Let's see what the changes are going to come out of that. After about 20 seconds of working through its calculations, we can come back to our cash flow screen and discover, okay, we dip into the red slightly in 1 month, but after that, it's relatively healthy. And maybe we'll say, okay, this is our realistic scenario, and I'm going to say, I can put a note against my scenario too. Assume 90 days and delay CapEx. And I'll save that off as my kind of primary scenario. Now I can come along here and say, okay, that looks pretty good. If we can keep reality to being equal to something like that, we're going to go well. All right, so that's some of the functionality that you get with a relatively simple cash flow model. Anybody who's actually tried to build these will probably at this point be saying, hang on, there's a few things missing. Let's have a look at a few of the automation benefits first. Okay, so one of the things that we get with Board is that multiple people can use this. Instead of a Excel model that's usually owned by, sitting on one person's machine, can only be modified by them because only they know how it all works and it's put together. This can be used by multiple people. We're trying to make it enough under the hood to give us a accurate answer, but really easy to use. All you need to know is what drivers you want to change, push a button and it will get there. We can evaluate multiple scenarios, which has been the downfall of most of the Excel cash flow models. They're so complicated, you get one answer. You print it out and then you might go through it again and print that next answer out. Whereas here we can start to look at the differences between all of these scenarios. But most importantly, I think, is that we've taken a modular design. We've seen that with cash flow forecasting, everybody seems to have a different approach. So we're not going for a one-size-fits-all approach here. We're saying that, okay, we're going to develop this module by module and see what you need. Here's an example from one of our existing clients. And you can see we've gone with the same style of wheel, but there's additional elements. We've got GST, we've got interest, we've got intercompany transactions going on here, dividends as well. So there's a few things that we'd probably include that I've left out of this demonstration model just to not clog it up with too many steps. But those are some of the things. The bottom one here, payment terms by client. The model that I was just showing you, they did their forecasting by client so that they had a pretty accurate idea of which client was spending what over the next 12 months. And here's another example of their real screen. The first thing I'd note is that because it's a real screen, you can see there's more detail there. We've also put in instructions and so on. But they've actually gone through, or rather, Board goes through automatically and determines, according to your cash flow, what your top 10 clients are. So here's their top 10 clients, and they've then been able to say, okay, for Woolworths, they're crap. They only pay 60 to 90 days, 90 to 120 days. But some of the other clients, we get much better returns on payments. So they're taking that to the next level, which allows greater tweaking, because it may be that in order to have the difference between running out of cash and actually having plenty of cash, it's go to your largest client and hammer out slightly better payment terms, and then run a scenario and see what that would give us. Or possibly run multiple scenarios until you can determine the impact of going along to Woolworths, our second largest client, and saying you need to pay everything in 60 to 90 days. Okay, that gives you a bit of idea of what we can do. I should also start to talk about what else this software does. So this software is called Board. It's used for a number of different purposes. It covers business intelligence, reporting, budgeting, planning, strategic planning, and a whole lot of other areas. So as an example, we can create all sorts of dashboards and KPIs. Board pulls from multiple different data sources, so we're not limited to just pointing to, say, one accounting system or just the accounting system. We can do all sorts of wonderful graphical reports. This one looks great. It looks lovely. I'm not actually sure what it's supposed to tell me, but gee, it looks nice. From a dashboarding and BI perspective, we've got the ability to create reports that are customizable. We can drill into sections of the reports, or filter down the numbers into channels or turnovers or so on. We can do more traditional traffic light style reports. And any of these reports, we can start to drill into the details. So I can drill in by salesperson, by month, and then maybe into individual month by customer, and so on, all the way down to the transactional level of your ERP system. But that's not all that Board does. It does all these lovely business intelligence, dashboarding and KPI functionality, but it also does a lot of budgeting, forecasting and planning functionality, which is similar to what we've been looking at, but say more of a traditional planning area where we're doing your annual budget or forecasts. Board is interesting in that, unlike, say, a business intelligence tool, it's not just pulling in data and reporting on it. It's also allowing us to be able to edit data, if we can find a person that I can use. Okay, so I can make changes to the data here, and I can make top-down changes. I can go in here and make a change here at the top level, change that to $3,000, and it will proportionally change it to push it down into each of the elements that have made that up. Obviously, even when you're doing your, say, budgeting and planning, you also got to have a business intelligence element here to allow you to be able to analyze what you're looking at. Okay. Go back to my presentation. That kind of ends my look at cash flow forecasting. I might throw it back now to see if we have any questions that come back. So I'll give you guys 30 seconds or a minute to think of some questions and then feed them through.
Yeah, thanks, Philip. That was excellent. Look, I think it's clear to see here that using the tools that we've got and what you've presented today, whether an organisation is looking for a simple cash flow report or model or a very complex one, we can help automate that process regardless of complexity there. So that was great. Thanks for that. Thanks for that overview.
Thanks.
We do have some questions that have come through already. So just a reminder, as Philip said, we'll do a little bit of question and answer. And Philip, I'll ask the questions for you, and if you could help answer them. We've had a number of questions already come through, so just a reminder there, if you do have a question, put it into the questions panel on the right-hand side of your screen. So, Philip, are you ready for the questions?
Fire away.
Okay. So the first one is it's kind of a generic question. What systems does this integrate with?
Good question. It can integrate with any systems. Obviously, TA, we have a number of ERP systems that we support, Dynamics, GPAX and Sun being among them, but we're not just limited to that. We can point it to anything, any accounting system or even a series of spreadsheets. The primary source for what you're producing the cash flow is going to be your budget, forecast and actuals, or mix of thereof. We don't really care where it comes from. We can pull it in and then start manipulating the numbers from there.
Okay, so excellent. So certainly system independent there in that regard. It's not tied down to one application at all. So just a very good segue to the next question. So technically speaking, how is the data extracted from the various accounting systems?
Okay, so we have, Board has the ability to create an ODBC connection to other data sources, be them SQL databases, Access databases, flat files, or something sitting in the cloud. So we have a connector that essentially does a SQL query that will then bring the information returned from the query into a cube within Board. Board is a cube-based product. However, once the data is in Board's cube or cubes, they can be manipulated either via these procedures that you saw me clicking and running, or even manually, in that we looked at being able to edit some of these things, among them the opening P&L.
Okay, thank you. Next question then is for someone that has more than one company database. So the question is, if you have several companies, can you prepare a consolidated cash flow?
You can. I should have added that to the things that I left out of this example model, in that it was just working on the assumption of a single company. But yes, you could. Even if the multiple companies had different chart of accounts, we can use the kind of mapping functionality that I briefly showed you guys to be able to map several different chart accounts to common cash flow elements. So yes, you can go down the track of, say, running cash flows by company, or bring everything in and have a consolidated one. I also mentioned that this model didn't really look at multiple currencies, but that would be achievable as well.
Okay, so you can do the combination there, different currency, multiple companies, consolidate, or separate.
Exactly.
Okay, excellent. Here's a very specific question. How is accrued or prepaid wages handled? It sounds like a real accounting question there for you, Phil.
Yeah, okay. The answer would be however you wanted it to be handled. Now, I mentioned that we saw that we don't have a one-size-fits-all approach. We'll go to one client and that's not an issue at all. The next client, it might be a big deal. What we've tended to do is build these models in a modular fashion, so that we can tack on additional things. Now, in your case, maybe that's something that we need to do, and we can look at using, say, a secondary data source, say your payroll system, to pull out just the actual paid wages as opposed to what you've got for payroll in your P&L, which may not, precisely equate to actuals. Again, this goes back to, I'm giving an example here that hits some of the bases, but in the real world, there's always going to be more elements in your cash flow, and everybody is going to be slightly different and have slightly different requirements.
Okay, thanks, Phil. And look, this may be a similar answer then to that question. So this is a very specific question. Do we use GST inclusive amounts? And it may well be a similar answer to your question previously.
Yeah, generally we would, in real life, I'll have another little box down here, another step on my wheel to be able to look at the effect of GST and when you're making GST payments and so on. So, you're assuming that all of your transactions here are GST inclusive. So you need to also cater for the cash flow effect of that. We do that as a separate module within the cash flow process.
Okay, excellent, excellent. Oh, here's a very specific functional question. Can we prepare the cash flow also by weeks instead of months?
We can indeed. Board is pretty good in that respect, in that we can pretty much create our own calendar. Look to see what calendar I've got. Mine only goes down to months in this example, but when we would create your cash flow model, we can go down to days if necessary. We have clients who work on month, quarter, week, 51, not 52 weeks, even starting the fiscal year in different months other than January or July. All of those things can be supported. The problem I'd have with doing a cash flow by week is that you'd also need to do your budgeting by that same time range as well. But if that's what you have prepared, we can certainly do that. And
as Board's holding its own calendar, that calendar can be different from your accounting system. It can be the same, or it can also be a different calendar. Is that right?
Yeah, no, totally. It can be a different calendar. We have a number of clients that use all sorts of slightly non-standard calendars, but weekly, but 51, not 52 weeks, or race days, 26 race days per year, and that's another calendar. We can also create the Board database with multiple calendars. So you have maybe a normal monthly calendar feeding into a weekly calendar or something like that.
Okay, excellent, excellent. Okay, here's a question around actuals versus budget. So does Board compare actuals to forecasted cash flows by month? So an actual versus forecasted.
Yep, that would be just adding on slightly another element to the system. I've built my model here that it's pulling in from a data source, and I've said create opening P&L, but I haven't really specified where I'm getting the P&L from. That's to leave it open. I could be getting this from actuals or from budget or from forecast or a mixture of all three. What I'd probably do is, if I wanted to do comparisons of a budgeted cash flow versus an actual cash flow, I would have this create opening P&L give me the option to say where I wanted to get the data from, and then save that as another scenario. But the short answer is yes, you could totally do that.
Okay, excellent. And look, I even know the answer to this next question because this is exactly what we do. But I'll ask it anyway and let you answer, Phil. So, are we able to help customize and set up the software for a particular type of business?
Yes, you're right. You could answer that one. And when we don't tend to sell Board just out of the box and say, there you go, off you go. Board is a toolkit. You can build pretty much anything you want, any procedure, any lovely looking screen, any report that you want out of it. But obviously you need some knowledge around how to do that. We generally will be approached by clients who want to purchase software like Board with a specific project in mind, be it planning or reporting or BI or maybe even cash flow. We'll put the software in for you. We will scope out a project, say around cash flow, build you a solution, train you up on it, and let you go. One of the things that I should point out about Board is that PA's attraction to the product is that it particularly suits the mid-size companies that we have a lot of as our clients, in that it doesn't require any technical languages. It is all drag and drop. So unlike a lot of the competitive products, there's no obscure query language that you have to learn if you're going to run this. You can simply drag and drop your way through to creating reports or doing procedures and so on. And we think that, and hopefully our clients will echo this, that makes it very ownable by the customer.
Okay, and look, that's again quite a nice segue into the next question here too, Phil, and it's a two-part question. I'll kind of frame it in that regard. The first part is obviously dependent on the organisation, but the second part, be interested in your answer. So how much is the cost of the integration for a company? That's part one. And then the second, are there recurring costs, or is it just a one-time setup thing? So probably two parts there.
All right, I get where it's going. Okay, so if you're going to just say that you were Acme Proprietary Limited and you wanted to build a cash flow model just like this, you need to purchase the software, obviously. Mm-hmm. And then there is an annual maintenance and support on that software, like every other business software that your company would own. And that gives you the ability to get new upgrades, contact our support desk for assistance and so on. So there's that kind of one-off purchase price of the software. There's the services around building whatever model or project you wanted to do, so this cash flow model. And then the third element was the integrations. The good news is the integrations are completely free. If you purchase the software, you can point it at any number of data sources that you want. You could also, important point, build any number of models. So maybe you've built a planning solution with Board, then you might build a cash flow modeling solution, and then follow that up with, say, a dashboards and KPIs for the CEO. It's all handled by how many licenses you have of the software. So, once you purchase software, you can use it for multiple different purposes, and you can integrate to multiple different data sources. Excellent
answer. Thanks, Phil. Look, we've just got a few more questions, and I'll kind of put them in order. Just a quick one here. Are we able to export to Excel or Word?
Yes. So every single screen has an export to Excel option available, so you can simply right-click and drop them out. But even beyond that, once you've exported to Excel, you can use a product that Board has called its Excel add-in that allows you to do data entry or simply save the report. So I can drop that report out to Excel, which is probably going to take a minute because I don't have Excel running. And if I was to save that report, I could now come back to that spreadsheet later, click a refresh button, and then open it and then have the numbers refresh from Board. So if you can view it as yet another front end for Board, that's probably not a bad idea. Let me see. There we go. So having done this, we have a Board add-in that will allow us now to click a refresh button that will then update my data. And that could, let's just pretend that this is your actual P&L. You could drop this out from your initial board report, save this as a spreadsheet, come back in later and just open up the spreadsheet, click refresh. That updates from board, and then board updates from your source accounting system. So essentially we've got another front end for your reports. You could also, if this was data entry enabled, you could also add new information in here as well.
Excellent. So not only can we export...
I should point out that that goes with all Office products. I can drop out to Word and PowerPoint as well.
Excellent. So not only can we export out, but we can actually use Excel as part of our process, use that as a tool that we can actually incorporate into the process.
Yeah.
Okay. Look, I'm just conscious of time. We've got a few minutes left, and certainly one of my roles is to make sure we finish right on time. So I'll just ask a couple more questions, Phil, if we can just quickly skip through them, and then I'll wrap it up. So a question here specifically around multiple bank accounts. Can board handle companies with multiple bank accounts where transfers may be needed between the two, that is savings to trading accounts?
Yes, certainly. And I go back to my my original point, which I made a couple of times, is that there's no one solution that fits all companies. Some companies will say, okay, let's just amalgamate all of our bank accounts together for the cash flow purposes. Others keep, term deposits, and other entities and companies within the group may keep their cash in separate areas. Yes, you can. It's just a matter of defining what you want. If you were to build a cash flow system along these lines, you'd come to us and you'd scope all of those things, and we'd design it accordingly. What we tend to do is look at each section and say, okay, you've defined that your creditors run pretty much like our standard template, so we'll just plug the creditors in. But hang on, you want to do extra things with your bank accounts. Okay, well, we need to just build that little bank account section because that's somewhat unique. The good thing about Board is that it's a toolkit. We can build whatever we need. If we come across a new requirement, no matter how bizarre, that doesn't faze us because we'll just go and construct the logic and the screens and the process flow.
Excellent, thank you. And look, just the last one, hopefully just a quick one there. Is there any functionality to monitor cash flow long short position for multi-currencies?
Sorry, I didn't quite catch that. You broke up halfway through.
Oh, sorry, Philip. Is there any functionality to monitor cash flow long short position for multi-currencies?
Okay. Yes. Again, I go back to my last answer. Is yes, you can do this. We'd be looking at adding in multi-currency functionality in before we started to do that. But again, it's whatever your requirements are. We can build accordingly. I've just realised I have forgotten a point here. Is that Board also has the ability to monitor real time as well. I've just been looking at a cash flow process or a cash flow forecast running out into the future. There's nothing stopping us monitoring cash flow for a much shorter time, and also doing alerts as well. So Board could, of its own accord, calculate the cash flow balance and your interbank balance for the next month, and then if it was going to dip below a certain point, email automatically someone who could then be alerted to have a look at this in closer detail.
Excellent. Hey, Phil, I just wanted to congratulate you because you've actually gotten through all the questions. So not only have you presented the content today, but got through everyone's questions. So well done, well done.
I mean, it was perfectly timed.
It was perfectly timed, exactly. So just to wrap up then, obviously we've, or when I say we, Philip has taken us through some very specific content today around cash flow and cash flow modelling. If you like what you've seen and you'd like to find out a little bit more, we'd love you to book a session with one of our consultants and talk to your account manager for further assistance in that regard. So for our existing clients, please reach out to your account manager. We will of course follow up with you as part of the routine from an event like this. And for anyone that's not currently working with us or not sure who to contact, you can certainly reach out to Eleanor with the email address and phone number there on your screen. And just finally, before we leave, today's session was a webinar specifically around cash flow. We do have another few events coming up. You can see there we have 3 webinars and 1 seminar. So the cloud and on-premise webinar there is focused around SharePoint. And we can talk you through whether you're looking for a SharePoint solution on-premise, in the cloud, or even as a hybrid option, as a combination between the two. We can talk through how that's a best fit for your organisation. The next webinar there, the Power BI dashboards in an hour. So that's one where we'll actually talk through for you what is Power BI, but then we'll also show you how to. So how to load data, how to create a report, how to share dashboards, and we'll all do that within 1 hour. The third webinar there is Sun Systems Q&A and Office 365 for 64-bit. That's very specific to our Sun Systems clients, and that's helping you prepare for an Office 365 move and understanding what you need to do with regard to Q&A, report writing suite. And lastly, we have a seminar coming up on the 17th of August in Sydney and the 18th of August in Melbourne, and specifically talking about the digital workplace revolution. So going well beyond the old email and file share and taking advantage of the Microsoft tools that are available for organisations now that can bring you into this digital workplace revolution. So on that, and look, that's just August. So we wanted to let you know the things that we've got coming up, and we'd love you to attend one of our future events. So finally, I'd just like to say thank you for attending today. Thank you to Philip for presenting and also getting through all your questions. That was fantastic. So as you exit the session today, you will see from your webinar screen there will be a little survey there where you can also acknowledge your interest and make sure that we can follow up with you in a timely manner. So thanks again, and remember we will send out a copy of the recording so you can review or pass on within your organisation. We'd love to see you at a future event. Bye for now.